What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today I've got a quick video for you, and how we're going to do this is we're going to go over a few slides here in the beginning, and then we're going to move on to actual charts, and we're going to check out Monday's price action, all right, and the setups leading to Monday, all right. So hopefully we can incorporate everything that we've been going over recently here on the channel in this video into our analysis of these charts. All right. Now, let's get right into it. When we are looking for like a pump and dump setup, all right, it requires a pump. This sounds obvious, right? But this is something you can be on the lookout for. All right. So you can see this day dumps down and puts in this low, and then the market starts to pump up. All right, this low right here is required. We need this low put in place and then this market to pump up. Okay, this is our potential pump. This is our anchor point, the target. Okay, so when we do pump, coil, and dump, this is going to be a target that we are aiming for. All right, remember, we're building the house and we need this anchor for the wall, roof, other wall. Okay, so looking at this slide, you can see that day one gives us our peak formation low, right? Our lower low, then this market starts to pump up. We get a peak formation high on day two. So we have our peak formation low, peak formation high. All right, this market then coils sideways. But on day three, you can see Tokyo puts in a lower low. Okay, why is it a lower low? Because it's lower than the previous low. Okay, before we were making higher high, higher low, higher high, higher low, so on and so forth. But here we're putting in a lower low, lower high, and then going into London, another lower low. All right, then this market pumps back up into these highs, through the high of the day, into the previous day's high before dumping. And you can see this London low is just like this low. This is an anchor point for this pump, coil, and dump. Every pump and dump is going to start with a pump. That pump comes from a low. All right, so we have that low here, we pump, we get another low on the day of the trade that begins that pump into our session or whatever. Okay, and you can see that if we zoomed in just on this day, we have the most recent low and the most recent high. And when we get to the session, we are working into that high for the dump. Okay. Now we're going to be looking at some examples of this setup on the actual charts, but I wanted to go over a couple of slides just to make sure we're all on the same page. Okay. So we're looking at the setup that Stacy calls 3 days of breakout traders in the market. And this is in the long direction for this example. All right. Now, this is a 3-day setup. We could get the trade on that third day of breakout traders long, all right? Or we could get it the following day. In this case, I've decided to really throw you for a loop and show you how we don't get it on that day 3, and then the next day we get an inside day, and then the trade happens the following day. So a whole 5-day sort of template, all right? But this could happen. We just need to be paying attention. We should know what we want to see. All right. If this market's down here working into the lows, that's not the pump and dump that we were looking to see. All right. So 3 days of breakout traders long is simply 3 days that break the high of the previous day. Okay, so we had this day that broke the high of a previous day we can't see. Okay, and then day 2 breaks the high of day 1. Day 3 breaks the high of day 2. All right, now it does not have to be 3 days in a row. We could have, our day 1 breakouts here, then an inside day, and then if this one breaks out, this would be our day 2 of breakout. So they don't have to be in a row. It just needs to be 3 days that break out in the same direction without breaking a daily low. All right, so in this example, like I said, we have 3 days of breakout traders long. Then we have an inside day the following day. That's a signal day. All right, and then the next day, we are making lower lows on the day, dumping down into the London session, breaking the low from the previous day, and then this market pumps back up going into the New York session. Where does it pump up to? To the previous day's closing price level. Okay. back up there to that closing price for a sell high scenario, right? We throw these three peaks, micro M at the high for the dump, okay? Now, here's a different example to illustrate something a little different. Here's our 3 days of breakout traders long, all right? So we have day 1, day 2, day 3, all breaking the high of the previous day. This one just barely breaks that high, okay? But what I'm trying to show you is we have this low, and then the market begins to pump. On day 2, we get this low put in place, and then the market pumps. These are potential targets if we do get the dump later on, all right? So then we have this day that gives us a slightly lower close, all right? But the next day, we dump down and put this low in place in the Tokyo session, and then this market begins to pump. And when we get to the New York session, we are still working into the high of the current day, right? Working into the previous day's closing price levels for the pump and dump, right? And we take out this anchor point for this pump and dump type of trade. The next day, you can see we dump down in London. London puts in a low, and then we pump back up into the New York open, back into the high of the current day. And then this market dumps and takes out that initial low that was put in place on this first day. Okay. So the market always needs that pump. Now, here's an example of this type of thing on the day, like a 3-session setup. All right. So we have the previous day's closing price. All right. We have our Tokyo session that gives us a low and gives us a high. We have our London session, right, where we continue to trade higher up to the current high of the day, and then this market dumps down on that middle hour of London, putting in a lower low on the inside, okay? Then for the New York session, we have pumped all the way back up into the previous session's levels, okay? And then began to fail, breaking levels here. Imagine a death line right here, breaking that level, taking out this low, and then continuing to take out this low for the pump, coil, and dump type of trade, okay? And even here is even more fractal, right? The pump, coil, and dump type of trade. Now let's look at these actual charts, okay? So you can see we had a funky week last week, no trading on Thursday, so we went from Tuesday, Wednesday, straight to Friday, okay? But here you can see 3 days of breakout traders long in this market. We had day 1 that broke the previous day's high, day 2 that broke day 1's high, and day 3 that broke day 2's high. That's our 3 days of breakout traders long in the market. And then when Monday opens up, we get this low in Tokyo, okay? We have come back down through the Friday's low, right? Putting in a lower low on the inside, right? And then continuing this day, we continue to put in lower lows all the way till we get to the New York session, where this market pumps up and then begins to fall, all right? So you can see we're still making lower lows on the day. And what that tells us, right, is if we're still putting in lower lows, that the low of the day has not been locked in place yet. So if you're looking for a long trade, right, you're counter trending what's actually happening. We're still putting in lower lows. The low hasn't been locked in place yet. You have no evidence to be buying it as long as we're still putting in lower lows, okay? And then you can see going into the session on this 1-minute chart, we have the most recent high and low range, okay? The most recent clear high and low. You could have used this high, right? Maybe you use this high or something like that, but this is the most recent high and low, and you can see that we, going into that 8 o'clock hour, have pumped back up from this low, right? We need that pump, that anchor point. We pump back up into that previous high, and then this market begins to fail. You can see that coil right here, where we right here, just like the notebook paper where we coil, okay, take out one side and then go lower. And we even have this little micro lower low on the inside, okay? And this is like our micro pump, coil, and dump going into the session, right? And this is just another look at potential entries, okay? maybe early in the session, but you see this micro M going into those highs to the left. All right, this is that consolidation where we take out one side, a false break to the highs right there of this consolidation, and then we go lower. And then here is our 8:30 open for gold. All right, we have dumped down and then we pump back up a little bit. We have this big engulfment bar, pin bars here, and then we break the low of where that pump was. You could get in anywhere in there, right? Or be adding in. Okay. Now here we're looking at the NAS 100, and again we have our 1, 2, 3 days of breakout traders in this market in the long direction, right? And you can see on this day we have our Tokyo session that doesn't really break any levels, all right? But here in the London session, this market breaks down below those levels. We coil, and now what happens when we're going into this New York session, right? We are down low, right? This is what I saw when I was on the 1 minute chart here. I saw this initial spike to the downside at the open, okay? And then these three, or before the open rather, I think. So I saw these three pushes here down into the low, big pin bars, engulfments, and I went ahead and I bought this market. I was targeting these highs, but I closed it somewhere up here as soon as it started to pull back, right? I put a short on the channel. You can go see that trade. Actually, I recorded it for you, right? I got in at the break of this middle structure and rode it out for just a few minutes, okay? Like 3 or 4 minutes. Okay, here's the DJ30. All right, I also traded this market on Monday. So you can see we have these previous highs here to the left. This market has dumped down, started to pump back up into those highs, all right? 3 days of breakout traders in the market. We had an inside day, signal day, just like our drawings, all right? Okay, and then on Monday, this is how our chart looked, okay? We had the previous day's high, the previous day's low marked off, and we were making lower lows all throughout this day headed into the session, okay? We have made a lower low here. This market put in another lower low, breaking the previous day's low right before the open. Then we pump back up, all right? We pump back up, and this is pumping back up into closing price levels, all right? This is our initial spike against the trend, a 3 candle stop hunt pattern that Stacy talks about in a lot of his older videos. All right, here's our micro M at the high of the session. The break of that middle structure is where I entered this market, all right? And I just wrote it down to here, okay? I was targeting these lows, but I let it run and shut it down as soon as it started to pull back on me, okay? That's also in that short that I've uploaded to the channel, so you guys can go check that out and see these trades actually recorded live, all right? So you can see here's our previous day's closing price, and this market pulls right back up to there. We break the previous day's low, still putting in lower lows on the day, meaning that the low has not been locked in place, okay? Then this market spikes back up against this smaller time frame downtrend, right back to that previous day's closing price before throwing those micro M's, right? And then failing. All right. And just as a bonus, we can look at this EuroUSD currency pair. All right. And we're thinking of this as like a 3 session setup. Okay. But we can see here we had the false break at the high of the week on this day where we broke the previous day's high. And then the next day breaks the previous day's low. That's our false break at the high of the week. All right. And then this market continues to put in lower lows going into that New York session on Monday. And you can see that New York has dumped down before the session, pumps up into the session to retest those London highs before melting and putting in the next lower low on the day, on the week, whatever. All right. So I hope that this video makes sense for you. And I know it might sound like I'm, rushing or something, but I'm just trying to keep these videos clear and concise. But I appreciate you guys being here, all of the support we've been getting. I really appreciate it. Until next time, I hope you continue to free your mind.